A little bit?
Yeah,
Yeah, that's mobile.
just sit in the garage.
The other thing
I,
I can't tell you is I put it on
It's
the back of
basically,
here.
well, the top part
This
is
is for
100% intact. The bottom part
Yeah,
is, it's got the
Nikii
table,
girls.
it's got the cabinet,
That's
cabinet.
the one
One
that's.
cabinet,
Mhm.
100% intact, it's a double cabinet that basically just falls apart. But, yeah.
Yeah,
So,
I'm gonna skip it
There's
because
like a
I
couple
am not
boards on it
scared.
that you might be able to just take
Uh-huh.
care of those
Yeah.
boards, but if not, then you can just replace one or two boards. And see.
Yeah, America.
Hi, everyone. Thank you for coming today.
You know.
Want to thank everyone for attending the first speaker for Co-working Week. And this presentation is sponsored by Interlink, Matt. So thank you, Matt. And it's also sponsored by Securitas. So thank you for that. And today's first speaker is one of my very dear friends, and she helps me with both of my companies. Actually, just started my third company. So she is helping me with my third company, so I'm really excited to have her here speaking about this today. So if you would, help me welcome Nikii Baker.
All right.
Thank you. My name is Nikii Baker, and I own Baker Paralegal LDA. I have to do the disclosures. I am not an attorney. I cannot give legal advice. I am a licensed document preparer, registered and licensed with the county. I have 17 years of paralegal experience, so I have worked with businesses. Today is going to be discussing the legal structures. What options are there for businesses? What do you need to run a business, procedurally wise? What are some pitfalls? What are some things that you don't realize a pitfall that you can probably avoid at the very beginning? We're going to sort through those step by step. I'm going through the major types of businesses today. There are a few others I'm going to touch on just briefly and kind of skip over because we don't see them that often. My other disclosure is before you start a business, I highly recommend that you seek tax advice and legal advice if you are not 100% sure of what type of business structure works best for you. Okay, so those are my disclosures. This is going to be pretty informal, so if you have questions, don't just ask. I will do my best to answer. If it's a legal question, I can tell you where you might be able to find an answer. If it is a procedural question, I can direct you into how to do it or where to look for the information for your particular procedural question. Okay? How many already have businesses going? I know a couple of you already like knee deep in businesses. Who is starting or thinking about starting a business? Who's gonna own their own franchise or go out on their own?
That's right.
The different kinds of business structures recognized in California, there's a sole proprietorship, limited liability partnership, a general partnership, professional partnership, that one you don't see that often, an LLC, a corporation, there's a C Corp, an S Corp, and a professional corporation. Now, you don't see a lot of LLCs very much anymore. Most of the corporations being formed are S Corps or professional corporations in California, and there's tax reasons and liability reasons that is formed that way. Okay, so we're going to spend a lot of chunk of time on that, but we'll start with the sole proprietor. If you're running a home-based business, if you are a consultant, if you are a husband and wife running a business, you're probably a sole proprietor. Even if you aren't paying taxes on it, you're still probably a sole proprietor. And you probably should realize that because the IRS can come after you and take all of your stuff. Okay? Because the person or husband and wife as one unit, they are in total control of all the assets, all the debts, all the liabilities. So if I was working and someone sued me, they can personally go after my house, my car, my assets. They can clear my account. Okay? People like this, especially new businesses, like this form of ownership of a company because it's easy and cheap. Right? If you're just starting out, you have to get a few things, but other than that, you're on your own. No one's Government's not really involved in your business. You get to make the decisions. You decide who your clients are. You decide what capital, if you're going to have any, how it's raised. So this is what you need for a sole proprietorship. And don't skimp on these, you guys. Don't. You already open to so much liability as a sole proprietor. Make sure you have your ducks in a row. City business license, you get that from the city. I think Marietta is $75 a year right now for business license. If you're doing business in other cities, you probably need one in that city too. Okay, so if you're doing Temecula, Marietta, and you're running a business, say, in Yorba Linda, you probably need to get a business license for each one, okay, if you're doing business there. The fictitious business statement that's filed with the county. There is a new law as of January. If you're going to mail it in, which is how it's commonly done, unless you want to hang out at the county clerk's office, which is all kinds of fun, you have to have it notarized. Okay, now it has to be notarized to send in the fictitious business statement, and it takes about a week to get it back. When you get that back, you have to publish it for 4 weeks. The cheapest place is a Friday Flyer in Canyon Lake, like $50 to publish it. It's the cheapest place that I've found. If you are a company or business that has to be licensed, bonded, and insured, get licensed, bonded, and insured. There are so many resources out there for commercial insurance, bonding. It's not worth the fines that you'll get if you get caught and not have it. Resale license. A lot of companies need resale license. It's not that hard to get. A couple of paperwork submitting, get the resale license. If you have employees, you need to contact the EDD.
What's EDD?
It's the Employment Development Department.
Yes.
All right. And then Board of Equalization. Okay. Open a bank account. Open up a separate bank account for your business. It keeps things so much clearer when you're doing a profit and loss statement and your taxes at the end of the year. And obtain your own EIN number, which is the Federal Employment Identification Number. You use your own Social Security number to get that EIN number. If you're going on the website to get the EIN number and you're getting a bounce back, okay, chances are you already have a business with your Social Security number. And you need just to call, they'll verify, and one business, or excuse me, 2 or 3 businesses can go under the same EIN number as long as it's not a corporation or LLC. Okay, so you can, all of your businesses, if you have 3 businesses, they're all partnerships or sole proprietorships, will all go under the same EIN number. Okay? And the husband and wife, talk to your accountant, talk to a business attorney for the husband and wife if they're a sole proprietor or as a partnership. Husband and wives do fabulous in business until they don't. So, you know your relationship. I would have an agreement, a written agreement for the business if you're going to go to a husband and wife. Okay, partnerships. General partnership. There are 2 or more persons engaged in business for a profit. All the partners are jointly liable. So if you have a business partner that somehow isn't ethical, or they were supposed to be paying the taxes and didn't, guess what? You're responsible just as much as they are, okay? And you get to share the profits as personal income, okay? Everybody gets a piece, everybody's liable. Limited partnerships, these were really big in the 80s and 90s. You don't see them so much anymore, the S-Corps now, but they are still around. A limited partnership, there's one limited partner and at least one general partner. The limited partner is not liable. They're usually the silent investor, that they front the money, they don't have the day-to-day operation of the business, therefore they're not generally personally liable if something goes wrong. And I say generally because when something goes wrong, when people sue, everybody gets named, okay? So that doesn't, you're probably not going to get a judgment against you, but you could get named in a lawsuit and have to spend money to defend yourself to get out of it. A limited partner is normally limited to the amount that they're in control. So if you're just a silent partner, you're probably going to be okay. If you're in there doing the books or some day-to-day stuff or some marketing, you're going to be held a little bit liable. So if you have a business and you're a silent partner, be silent, okay, if you don't want that liability. And you do have to file a certificate of limited partnership with the state, with the Secretary of State, for it to be recognized. So if you want that protection, you need to make sure that that is filed. Okay, so with this, you need the employer identification number. The business license, again, any city that you do business in needs a license. And you're going to do it as one, both partners, 3, 4, 5 partners, one person's going to take care of all this. A partnership agreement, and I say play from the end. We'll go over that in a little bit. And a statement of partnership authority. You have to have, everybody needs to know what they're doing. What's your part, what's my part, who has authority. Everyone needs to understand the vision of what the company is. Do the fictitious business statement, and then don't forget if you're limited partner, file. Okay, play from the end. I compare partnerships, general partnerships, to marriage. The wedding is super fun, you're planning, it sparkles and fluff and a good time, but nobody thinks about 6 years from now when you can't stand to be in the same room together, okay? You're stuck in a partnership, your business, you have assets, you have debts, you have liabilities. You need to figure out what's gonna happen to get out of it. So I say play to the end. We don't do this in marriage, but I strongly encourage you to do it in business. When you're writing a partnership agreement, World War III. Oh, that could never happen. Yeah, it can.
Huh.
World War III, right? You play to the end. What's your purpose? What's the business's purpose? You need to make sure that you and your partners have the same vision for what you want this company to be in a year, 5 years, 10 years. If one partner's like, I just want to grow it up and I want to sell it, and the other partner's like, no, I want to leave it to our kids, you might have a problem with the purpose. You might want to get very clear on what your purpose is. Decision making. Who makes the decisions and what kind of decisions are they allowed to make? It has to be clear and defined. People think that they understand what the agreement is until something comes up, and then one party's over here, the other party's over here. You guys have a business to run. So in the beginning, figure out, okay, I'm going to take care of HR, I'm going to take care of payroll, I'm going to take care of marketing, I'm going to take care of whatever it is, and have it divvied up. And you are responsible for that. Stay out of the other people's stuff. You know, if you can, you do yours. You already have it divvied up. Let them do theirs, okay? Term of the partnership. How long are we going to do this? Are we going to leave it to our kids? Are we going to have 15 million assets and sell? You need to know what the vision is for the end. How much money is each party putting in? That's huge, right? There could be a person that's going to run the business and they don't put any money in, and someone else contributes a lot of the money, but you need to define that in the beginning. And it needs to be in writing in case it all falls apart. There can be a quick evaluation as to percentage of who put in what monetarily. How much time are we spending on the business? I would love a 3-day work week. I would love to have someone else do 10 hours a day, 6 days a week. And if I could find someone to do that, well, do an agreement right away. And if everyone's expected to work a certain amount of time, it needs to be defined in there so that expectations can be met. Who has signature authority? This kind of goes back to what I said. Remember, if one partner doesn't pay the taxes or one person's bouncing checks, everybody's liable. Figure out who you want to have signature authority on contracts, on bank accounts. You can do an and, you can do an or, you can have just one person. You have to figure out what's best for your business and your business partner. You never know who you're in business with until you're in business with them. I have a friend that his dad owns a pretty successful business, and his wife came in, so the daughter-in-law came in and started running the day-to-day business, and she has signature authority. She's in prison now. She embezzled thousands and thousands and thousands and thousands and thousands of dollars. So I do a background check maybe. Be aware if you are an owner or part of the business, don't just shut that part off. Okay, they're taking care of the money. Check. It's your responsibility to check and keep track as well, because you're going to be liable and you can lose everything. Okay? How are you guys going to get paid? You're going to draw a salary? You're going to do a W-2? You need to know monetarily where you guys are. We all have to live, pay bills. And can we add partners? So if I have a partner with Sally and I get married and I want my husband to be part of it, are we allowed to do that? Or is there a procedure in place for us to add partners? Death and disability. There is nothing worse than dealing with someone that's a business and someone dies. Okay? Everything is thrown in its head. So what happens if someone dies? Does our partner, husband, wife take over the shares? They go in disability. You're going to lose the day-to-day running of your business. So on that part, my suggestion is have a buy-sell agreement, which usually means that the company pays for life insurance on the one partner, and if they die, the spouse gets the money. So they buy them out. Okay? That's generally what happens on a buy-sell agreement. Or the partner has first right to buy out the other partner. Get my cats out of the room. I'm so sorry. Oh my God, I'm scheduled. Okay, and how are you guys going to resolve conflict? Are you just going to break the company up?
Biggest guy in the room wins.
Arbitration. There's some. You can go to arbitration, non-binding arbitration. Do you guys know what that is? Arbitration, non-binding arbitration. Okay, it's less costly than going to court. If it's non-binding, you'll plead your case, they'll plead their case. Usually it's a retired judge, and they will say, look, this is what I find. If you guys go to court, this is how it's going to work out. So there's a little bit more leverage, and if you don't agree with it, you can go file, right? Or there's binding arbitration. What they say goes, okay? Yeah. So I would have that in your agreement too. If there's a conflict, are we going to have arbitration, binding, non-binding, or just we'll walk away? How do you guys want to deal with that? And then to dissolve it. Some people just walk away, like I don't care, I don't want to talk to you anymore, just have it. Some people want to fight over like pencils and like the smallest stuff. Just they want to fight, they're mad. So if you have an exit strategy already, it will be a little less painful than trying to figure it out when you guys are already mad at each other. And the husbands and wives too do this because you're probably getting divorced at home and then having to go to work and see them. So it's probably not a good place to be. Professional partnerships, it's a group of licensed professionals. So it's a partnership, usually it's accountants or dentists or doctors. They all have to be licensed in the same industry. Okay, sometimes a lot of times the doctors would get together. They don't want to be incorporated because they want the tax benefits that they get through pass-through partnership, but it's if they're professionals. So you have to be licensed in order to be part of that group. We don't see that often anymore. LLCs. We don't see these that much. We're kind of getting away from LLCs a lot too. Now we have the S corps. It's a hybrid entity. It's recognized by the big state of California. There's tax reasons that you would want an LLC or not want an LLC, and benefits. There's reasons that you have benefits and tax purposes, which Nicole will talk about the taxes, for an LLC. An existing partnership can become an LLC. You just have to file the paperwork. So you can be a partnership forever, and then something changes or there's some liability going on, and you switch it to a partnership. You have tax choices, and bookkeeping is the same as a partnership. But you have to keep your own account. You guys, bookkeeper, you have to have some professional help probably. And control is divided among the members. So however members there are, but they can have different percentages. Okay, so in an LLC, there can be 25%, 3%, their profit and loss. Nicole. Their profit and loss can be 5%. It just depends on how the organization is formed and what the agreement says. And you need to file. Nicole, you can tell me, Nicole's up next, she's doing taxes, so you see her tax.
I'm not late, I'm early.
You're early. You need to file the articles of organization with the state. So you need to check the state website and make sure that it's not taken, and you need to have it filed, or you'll be not in compliant and can be in trouble. Okay, so it's pretty simple to do an LLC. The articles of organization with the state, you have to do a statement of information annually. One scam, and I see them all the time, and I was going to try and bring one. You will get in the mail, it looks super, super official from the Secretary of State that you're late or you owe, or you haven't done your statement of information. Pay me $225 and we'll take care of the fine. It's a scam. You have to read all the way to the bottom of the form, and on the very bottom in tiny writings it will say this is an advertisement. Okay? The statement of information is $25. You can do it online. So if you're getting something for $125 or yes?
Statement of information, I was under the impression that you do it once in every 2 years.
Nope. You need to do it the first 90 days after you form, and then annually.
Sure. That.
You can do it online.
Well, of course, you know, I'm doing it, and that's why when I was going through the documents, it said that
Every 2 years.
biannually. That's
Just check your statement, and my understanding, I do it every year. And corporations, you have to do it every year.
The corporation have to do every year, but LLCs is every
2 years. I do it every year because things change, and the process, there was a process as well.
It's better every year, you know, so out of your way anyway.
Yep. You'll get a little card from the Secretary of State in the mail. They send it out 2 months early and says you're late. Just so you guys know, they sent their little postcard. They'll say you're late, you're not late. You can look online of when your expiration date is. Okay? You have to publish it for 4 weeks in that approved publication. Like I said, the Friday Flyer is cheap. They take care of me. They're super easy. You email it all to her, fax it. She takes care of it. Get the EIN number, bank account number, and the managers. Kind of like a general partnership. You guys have to have an agreement of who's doing what. Is it going to be a member managed where the people in the LLC are managing the day-to-day? Or are the people that own the LLC going to be in Bora Bora drinking cocktails and they're going to have a manager? Okay? So that's kind of your options with that. Make sure contracts are signed with managers so they know what their responsibility is and who they need to talk to if there's a problem. Okay, corporations. Managers. It's its own legalized entity, so it's its own kind of person, which protects the owners, shareholders from personal liability most of the time. A C Corp or a corporation can have unlimited shares. Okay, it's a little bit different than an S Corp, and it continues after death. You don't own the corporation. You own the shares. So when you die, your shares go to whoever you designate or wherever the bylaws say they go, and it passes on. So it can live forever and ever and ever, and residual income can come to those after you're gone. It's easier to raise capital if you're a corporation. Sole proprietors, unless you're, have really good credit, someone at the bank, have a really good reputation, you might be calling them off. Corporations, easier to get capital. A lot of corporations were forming in Nevada because it's cheaper, and if you do that, that's fine. Just make sure you register with the state as a foreign corporation. Okay, you need to do that annually as well. They need to know that you're here and you're in business. Okay. People form corporations because they don't want personal liability, which is true. However, there's things that you have to do in order to not break the corporate veil, pierce the corporate veil. Minutes. I see it all the time. People get their shiny new books and their seal, and they open it up and they play with it, and then it sits on the shelf. 2 years, 3 years, 4 years, 5 years, collecting dust. No minutes are done. No directors are addressed. they get sued, what's the first thing an attorney is going to ask for in a corporation? That corporate book.
The minutes.
Yeah, it's not that hard. And if you are a corporation of one, if you're an S corp, a corporation of one, it's pretty easy to do the minutes. You vote for yourself, right?
Mhm.
But just put it in there so that I had a meeting, I approved all my stuff. Make sure it's to use document that you had the meetings. The corporations are tax-friendly fringe benefits that are sometimes unavailable to other entities. They get more stuff. They get more perks than a sole proprietor would in tax and fringe benefits. And Nicole will tell you all about that, so you should stay for the next one. Disadvantages. You have to keep the records up to date. There's more governmental control. I mean, realistically, if you have a corporation, you have to make sure the name is available, fill out the articles of incorporation, submit it to the state, do the statement of information, designate an agent for service of process, which means if someone's going to get sued, if I'm the agent for service of process, they serve me. That's all it is. Okay? So, and if you have to keep that updated. If I move and I'm not the agent anymore, you need to let the state know. They need to know. It costs a higher cost to form. It's about, in cost altogether, it's about $1,000 to, just in cost to form a corporation. With the book, the bylaws, the articles of incorporation, and have someone do it for you. The business is controlled by the board of directors, which is fine as long as everyone's getting along. You've seen like the hostile takeovers, or there's board of directors and someone comes in and kind of plants the seed, and the next thing you know, everyone's thrown out of the board of directors and the new group's put in. Okay, and that doesn't happen generally unless you're high up company, but the individuals don't own it. You own shares, which if you have a high, 51% or a high share vote, you'll have a lot more say. A tip for you all. If you are forming a corporation and you, husbands and wives, I see this a lot, if you are looking for government bids, make the female at least 51% and the president. Why? You can get government bids and government jobs for being a woman-owned business. I see this a lot of times with married couples, and the wife doesn't really run it, and the husband's like, I want to be 51%, I want to be the president. Okay, and then I show them all the things that they could get from the state, from the federal government. They flip real quick. I'm like, okay, honey, it's community property anyway. Who cares? It's a number. It's going to get you those extra money coming in. You guys can fight over that and put it on the board. There is some taxation issues that some people don't want to get taxed twice. But if you're making a lot of money, right? If it works for your business, it makes sense for you, and you talk to your accountant, then it might be a good thing for you. And individual shareholders cannot deduct losses of a corporation unless it's an S corp. Okay? So talk to your CPA, your enrolled agent, whoever's doing your taxes. It is complicated. It is very complicated, the tax implications. You need to know ahead of the game before you start down that road to know what you're doing before. It's hard to go back and undo. So an S corp, the advantages, the taxation is better for S corps. One person can form an S corp. There have been some court cases where the court has said, I don't know if it's really an S corp, you're the only one, just keep up on your minutes and you should be fine. Okay? The owners share the net profits and they share the net losses. But they do enjoy, they're not going to get sued. It's like a corporation. As long as you have that corporate veil in place, you're probably going to be okay. Disadvantages. You 100, that's all. That's all the stocks you get. But most people, there's 2 or 3 people in the business anyway. You just issue accordingly, percentage-wise. That takes care of that. You must be a U.S. citizen or resident. You must file the IRS form. That one gets missed a lot. If you don't file that form, your first year of taxes, you have to go back and explain to the IRS why you didn't, and so just make sure that form is filed at the same time. Talk to the benefit restrictions for shareholders. When you're looking to form an S Corp, talk to your accountant or your attorney, business attorney, to find out. Have your goal in mind of what you want your corporation to look like and write it out. Like, I want this benefit, I want this tax, I want this, and work with your team to figure out which one's best for you. Generally, there's a calendar year operation for an S Corp too. You can request it be different. Sometimes they do, sometimes they don't. Just I don't know the rhyme or reason for it, because I find out what they want, I fill it out, and then they go to their tax person to figure the rest out. Okay, so to form a corporation, the Secretary of State, you need to see if your name's available. If it's an LLC, it has to have LLC in the name. If it's corporation, it has to have Inc. or incorporated in the name somewhere, okay? Reserve the name. So I do this sometimes, I don't always do it. With Dion's new business, she was waiting for this name to come up. So as soon as it came up, we reserved it. If it's some obscure name, I don't generally reserve it because I get it done within a week or 2 weeks. Odds are the name's not going to be taken. File the articles of incorporation with the state. It is now just a form. Some people had articles of incorporations way back when, and it was pleadings, and you had to type it all out. Now it's a form. You do have to have an actual address on a P.O. box on the articles of incorporation. The state wants to know where they can find you. It's about $100. File the DBA with the county. It's $48 to $78 depending on the county. And remember, if you submit it by mail, it has to be notarized. You know, you're authorizing it to be formed. I guess they had a problem with people doing fake businesses. I don't know why you'd want to do that, but then publish it. Obtain your EIN number and your business license. Compose the bylaws. These are going to be the rules of the corporation, so if you get this wrong, you might be in trouble. Okay? I know there are some companies out there that you can go on the computer for $70, $90. You can get all this done, which is fine, except it's super expensive to undo those bylaws when there's a problem. Those are the written rules of your corporation. If you're married and you don't want your spouse to have a part of it, they need to sign off on their community property shares. Good luck with that. I have one that's pending that I'm waiting for both spouses to do that. I don't think it's going to happen. Purchase a corporate book and seal. You don't have to have this, but you do need the stocks and the stock ledger. The little books are nice and have their seal, they're cute. Just make sure you open them. We don't need any dust. Hold your first shareholders directors meeting. If you guys don't hold your first meeting and take the notes of who's the directors in place, acknowledge the stocks, acknowledge the business, it's not going to exist. You need those in the corporate minutes. And the statement of information has to be filed the first 90 days after the business is formed. The state just wants to make sure that the business is actually a business and that the agent for service or process is the same person. And open a bank account. Okay, the annual meetings, there's directors, the officers of the corporation, the CEO, president, secretary, treasurer. There are some companies that have a bunch of VPs. I have one that he is everything except he has like 4 sons and they're VP of everything, which is fine. That's how he wants to structure it, so that he can sign over his shares when he's gone. That's how we structured it, the VPs. You have to have your shareholders meetings, and the voting rights depend on the percentage usually of the shareholders. Okay? You must give written notice of the meetings unless it's waived. The waiver has to be in the corporate book. If something explodes and you have a corporation and you're trying to sneak out this person and so you have a secret meeting, it's going to be trouble later. So just have everybody notice, especially if it's a special meeting, make sure they get notice. And a proxy is a person that is designated by a shareholder to represent them. So if they have a proxy, make sure it's noted, and their vote, they can vote for the person that's not there. You must have a quorum. A quorum is in your bylaws, and it says how many people or what director, shareholder percentage needs to attend that meeting for it to be a valid meeting. Make sure that that's in the notes. Okay, the bylaws are going to state when you need to have your annual meeting. Talk to your tax professional. I have a few, I don't know if I does this, but that they have meetings every month and they write off a percentage of it. Right? Okay. And so, make sure that they're typed up every month. Here's our goals. Here's our whatever we're doing. Have it on a boat. Have it on whatever. Talk to your professional. But that might be an option for you to pay for a nice little vacation. Reasonable. Save some money. The minutes must record the activities and agenda of the meeting. Make sure if it's a special meeting, you send the agenda out so that the shareholders can decide whether they want to attend or not. That's giving them notice. This is the biggest way the corporate veil is pierced, not doing these things. Okay? And what happens is everybody gets sued. All the directors, shareholders, anybody that took out the trash, their names are going to go in the lawsuit. It's expensive to defend yourself in a lawsuit to get your name out. Okay, so a lot of people don't know how to run a meeting. Structure. There's Robert's Rules. It's an old system of running a meeting. It's great. I send it to all my clients that don't know how to run a meeting. It goes to the agenda. Read and approve all the minutes. The officers, boards, and committee give report. Any special reports that are going on. Special offers, unfinished business, and then new business. Treasurers, you're part of the reports from officers. Make sure there's a treasurer report in there. Everybody needs to know on up and up what's happening, and it's going to kind of save your hiney if it's in the notes, as long as everything matches up. Okay, if you need to close a corporation, people don't realize you have to actually take steps to close a corporation, or you're going to get taxed and taxed and taxed and taxed and taxed until the state has the dissolution of corporation. You can sell all of your stocks to a third party. That's one option. The board has to approve it, generally. Okay, so that doesn't happen very often. You can merge with another company, or have two companies merge together and become a third. That happens in bigger acquisitions, not so much in the smaller ones. Or if you're just done small, just you, one person, and you're just done, you file the dissolution with the state. You have to acknowledge what debts you have and who's going to take over those debts. Okay? Talk with your professional or tax professional about when you need to file so you don't get hit with $800. Okay? There is a timing issue with that. Okay, your team. Please form this team. And before you get started, form a team. A bookkeeper, an enrolled agent, a CPA, a business attorney, HR, and our payroll. Okay, here's my sources. The forms are available at the county recorder's office, at the state, Secretary of State under business entities. You can do a lot of this online. There are samples of bylaws. Just read them very, 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 very carefully and make sure that that's a structure that you want to have before you incorporate those into your actual business, okay? Any questions? Look, I'm not an attorney. There's my disclosure. Any questions, comments? No?
I noticed a lot of companies are formed in Delaware. Do you know the advantage of why that might be?
Probably tax reasons.
I can answer. There's no state taxes in Delaware, Nevada, Florida, Texas. If you make a phone call and you're a California resident one time in the course of a year in the state of California, you have to file the California form. There's now a $2,000 penalty for not doing that, and they're actively going, all they do is look who's the owner, and they look who has California property, and they'll actively go after the LLCs and S-Corps that are doing business in California. So it's a lot more expensive when you do that to try and
It didn't used to be that way, right? And they just...
a lot of people formed in Nevada, and if you're not doing business in Nevada, that's...
Right, because it was cheap to form, and there's
and there's no
you have
tax.
to register as a foreign corporation.
But that's expensive, because then you have to keep up your registered agent and a P.O. box in Nevada. You have all these extra things instead of just forming straight in California, which, if you're doing business in California, it should be a California entity.
Correct. So glad you're here, Nicole.
I'm so glad I'm here tonight.
She's an awesome tax person, so if you have tax questions, I highly recommend that you talk to Nicole. She will put you in the right
Oh,
direction.
God, it's me, I'm sorry.
That's okay. I have cards up here. If you guys have any questions, I do work out of here, out of co-working. I'm happy to answer procedurally. If like I missed that part, you can give me a call or you can email me and I will get back to you. Hopefully in a relatively short time. But thank you guys for coming. Yay! You guys can mingle too and pass each other's cards. I'm a big networker, so mingle and pass cards and make connections. Yeah, to go just file it out. I was like, I didn't have to
I know, I'm like, rude, shut up, let's help her.
Exactly what friend Susan did.
Okay, I like
Just file it because you're gonna have it anyway. Just file
So
it.
working on a project 2 weeks after me.
I don't know if
It actually works for teams.
You don't look like these are the three tablets that change.
Yes.
Well,
That would be one of the things that-
There was like-
I don't do that.
I like that one, but for a, like, fashion.
Corporation.
I'm not really that much. Like, it's very fashion. Okay.
I like it. I don't like the yellow one. No.
Scanner thing? Yeah.
Yeah,
We have
I
a
like
basic
that.
project work.
Oh,
But
do you
that's
really? If you can get it online,
Him and I,
you can get it online at this
we're
address.
trying to determine now, do we form a partnership?
At the recorder's office address, under
Like
forms.
at that point,
You can get it online.
I think that might be like.
It's like-
Like,
We're around.
Like,
It's one of the products.
in the forms. Yes.
How you doing, Patrick? When you have a second, I have some questions about